What's up, traders? Smooth Forex here. Today's class we're going to be talking about what candlestick. As you guys can see, we have two candlestick here on my screen, which is the green candlestick and then the red candlestick. Now, as we all know, for new traders, they might actually don't know what a green candlestick stands for and what a red candlestick stands for. And that is what we're going to be discussing today. And now, for a green candlestick simply means what? Buy. And the red candlestick simply means what? Simply means sell. Now, like I said, most traders can actually use whatsoever color they want to use. I can actually use this green candlestick. I can change it to what? To black, or rather change it to what? To white. And then I can change this red candlestick, change it to yellow or whatsoever color I want to use. But default color is green and red. And now I'm going to be explaining something to us because I know most of us like, how does the candlestick actually opens and then how does it what? Closes. And now that is what I'm going to be explaining today. Now, if you see what we're having right here, we're having what? Opening, and then we're having what? The closing, and then we're having the opening here, and then we're having what? The closing right here. And now, if you guys look at this, if you're looking at this, this is the body of what? The candlestick. This particular image right here is the body of what? The body of the candlestick. And now, most of us will know there are different kind of candlesticks that actually forms in the market, but these are the what? Major. This is the major one that most people actually would use, and we call this Marubozu. This is another name for they also call it one an engulfing candlestick, and we also call it what? A Marubozu. And now, if you see, market opens right here at this low, and then closes what? Closes above here, which is what actually gives us what? This what? Up movement. And the market what? Opens above here, and then what? Closes below here, gives us what? This bearish what? Bearish movement. Gives us what? This bearish movement. Are you with me? And now this old tick you guys are seeing right here, this old tiny drawing you guys are seeing right here, they are called what? Shadows. You can call them shadow, and you can also call them what? Weak. You can call them shadow, and then you can what? Call them weak. Are you with me, guys? This is how the candlestick actually what? Operates. And I'm going to show you how it actually what? Prints out on the real chart. Now, like I said, we have various type of candlestick. We have of the doji, we have of the hammer, we have of various kind of candlestick. And then I'm just gonna be focusing on this particular candlestick. And like I said, I'm not gonna be teaching all, but I'm still gonna be touching, which I mean the indecision candlestick, which are the one I call doji. And this is how a doji candlestick looks like. A doji candlestick looks like this, and then it also looks like what? This. A very small what? Small body, a small body, and then a what? A long wick, and a long wick. And then this is another what? Doji right here. Doji actually what? Opens at the same place. It opens here, and then what? Still what? Closes at that same place. Now the market is opening here, closes here, still what? Bullish. But then this is actually what? Giving us what? And indecision what? Indecision what? Movement in the market. And now I'm going to take us to what? A real what? A live chart, so I can actually what? Explain all I've been saying. Now, if you now move to what? A live chart. Now, let's look at what we're having right here now. What we're having right here now. If you guys see this, look at this particular candlestick. Particular candlestick we're seeing right here. This particular candlestick. This is a what? A bullish candlestick. Actually, what? A green candlestick. And now, like I said, a green candlestick simply what? Simplifies what? Bullish what? Movement in the market. Market actually what? Opens right here and then closes what? Closes what? Right here, which actually what? Signifies that what? There are buyers in the market. Signifies what? Bullish trend in the market. And now, when I was talking about the various types of candlestick we have, like I said, we have what? The bullish candlestick, the bullish candlestick, which is the green bullish engulfing candlestick, the bearish engulfing candlestick, which I also call Marubozu. And then we have the doji, we have the hammer, we have the hanging man. And now I'm going to be showing you something right here. This is what? A bullish candlestick. And now if you see right here, we have what? A bearish what? Candlestick. This is a bearish candlestick. A bearish candlestick actually what? Opens above right here. Opens above right here, and then closes what? Closes below here. Closes what? Below here. You guys can see, once you're having this big push in the market, then what happens to the market? If you guys see what we have right here, when the market will give us this bullish candlestick, you can see market has actually what? Be pushing to the upside, and then started having what? Red candles were printing out here, and then start giving us what? bearish what movement. You guys should just chill about all this movement. And now let me now bring us to how this candlestick operates on each time frame. We have different kind of time frames. We have the monthly time frame, we have the daily time frame, we have the weekly time frame, we have the 4 hours time frame. And now each candlestick signifies the time frame. Each time frame signifies each candlestick signifies what the time frame. Now I'm on the daily time frame. You guys can see I am on the daily time frame. This is the daily time frame right here. And now each candlestick signifies what a day in the market. This is a daily time frame. This is actually a signal I actually gave out to my VIP just now. We've been holding at this sell zone, but now I give another entry. Now, like I said, each candlestick signifies the time frame. Now, this is the time frame, daily time frame. This particular candlestick you're seeing right here is a day. What happens within a day? This is what happened within a day. Market actually was sold right from here. It opened right from here. It opened right from here. And then closed here. And then closed here. That was what happened a day. Now, if you go down to a 4 hours time frame, now you're going to see what's going to happen, how this thing is going to look like on the 4 hours time frame. Now, let's now go down to the 4 hours time frame. The 4 hour time frame. Now, let's see what happened in the 4 hours time. Look at this was the daily high opening and then the daily was closed. Now look at how many candlesticks printed out on the 4 hours time frame. We have 1, 2, 3, 4. This particular candlestick is a 4 hour candlestick. This particular candlestick from here, opening right here and closing right here. And closing right here is a 4 hour candlestick. And then market opened right here as well. And then closed here again. This was another 4 hours candlestick. Now, if I go down to 1 hour, it's going to look different on the 1 hour time frame. If I go down to a 1 hour time frame as well, you guys are going to see something different on the 1 hour time frame. Look at what the way it's looking like on the 1 hour time frame. You can see this is the opening on the 4 hours time frame and then closes here. And now you can see on the 1 hour time frame, we have 1, 2, 3. About 1, 2, 3, 4. It's about 4 candlesticks that actually gives us what a 1 hour. This is a 1 hour candlestick. This four candlesticks give us a 4 hour candlestick. That was why I actually marked this high and this low. And as you can see, we have 1, 2, 3, 4 candlestick. And now that is each candlestick for 1 hour. Like I said, each candlestick prints out a particular candle based on the time frame you are on. And now if you go down to a 5 minutes time frame, you're still going to see the candlestick printing out every 5 minutes. Okay, look at now. I'm on a 1 hour time frame. Now, if I have to mark this particular candlestick, let's mark this last candlestick. Let's use this particular candlestick. Now we're using this particular candlestick. Now let's go down to the 15 minutes time frame. So we're on the 1 hour. Let's now go down to a lower time frame. Look at the way the market is looking at on the 5 minutes time frame. You can see this is actually a candlestick on the 5 minutes time frame. This candlestick just opened. The 1 hour candlestick just opened about 11 minutes ago. And now you can see how many candlesticks that's printed out. That's printed out about 2 candlesticks, which is this first one and then this second one. Now if you're to wait for about 14 minutes time, you're going to see this particular candlestick going to close after 5 minutes. This on the 4 hours 5 minutes time frame. Every 5 minutes, the candlestick closes and then another one opens. Another 5 minutes, in another 5 minutes time, another candlestick was going to close and then a new one is going to open. Now let me now explain why I said a different kind of candlesticks that we have. Now, if you can see here, we have a very strong bearish candlestick right here. And now if you can see what I talked about, doji candlestick. Look at what we have here. This is an indecision candlestick. A doji candlestick simplifies indecision in the market, which means is either the buyers are about to come into the market or the sellers were about to come into the market. Now for a year, this is the market was actually going up right here. You can see there's a bullish engulfing candlestick right here. And then you start seeing doji stick appear. We start seeing a doji stick appear right here. This is the doji stick appearing right here. Then at this point, be like, whoa, what's happening right here? It's like, okay, buyers are beginning to lose momentum. Like, okay, buyers are beginning to lose market. It's like sellers are going to start coming into the market right now. Okay, now if you see something playing out like now, what should be coming to your mind? Like, okay, like sellers are going to be coming to market now. What should I be looking out for? Looking out for selling opportunity. And mind you, the old trend is bearish at the movement now. Like, okay, sellers are about to start coming to the market because you have seen an indecision candlestick being printed out. Now let me now do another example. Let me give us another example right here. If you look at here, at this point right here, this whole movement right from here to this point, market has been what? Selling. And then what happened right here? You guys see right here, we had what? Another what? Indecision candlestick. Indecision candlestick always looks like it looks like this, either a cross or gives you what? A small body, gives you a small body, and then what? A long what? A long wick, or even a tinier body, just like this, and then a long what? A long what? A long shadow, I mean. These are what? Indecision candlesticks. And then we are seeing small, tiny candlestick being printed out, tiny candlestick being printed out like this. After a trend down, it signifies what? That trend is about to what? End, and then the other trend is about to what? Get started. Now, which is what we are having right here. Now, if you look at, sorry, let me take this off. So hold on, guys. If you guys can see here, look at what we have right here as well, at this point, right, as well. Now, let me now show us something. Look at here. Market has been going right here, boom, and then went up. Now, we're expecting market to start pushing up because of this candlestick we've been seeing. And then what happened right here? You guys look at this. Look at this particular movement right here. Now, then we're having another what? Indecision candlestick right here. And now, you cannot just sell or buy the market because you're seeing a particular candlestick. There are other what confluences are added to it. You're not like, okay, because you're seeing in the short candlestick, then that market simply means it's going to start rejecting. And now let me start what selling the market right from there. Definitely, most of the time, let me say 70% of the time, it's going to what sell at the same time, and it's going to what buy. But then there are other confluences that the market is reacting off a zone, either a support level or a resistance level, or your supply or demand zone or your trend line. That is when actually what gives you this what gives you this what would I call it? Actually, what gives you this upper end to like, okay, take that particular trade at that time, and then you can now go down to a lower time frame and then wait for your confirmations. I know most of those who are not new traders would understand what I'm talking about. And now if you can see, if you're to go back, keep pushing, then we see other words, other candlesticks were being printed. Now let me now take us backward, and then let's see how market always react. And then when it prints out what indecision candlestick, and now look guys, what we're having right here, guys. Market what gave us a sale, and then what you can see indecision candlestick right here. And then what happened after this indecision candlestick? Market went up, and then again gave us what another indecision candlestick right here. You guys can see this, gave us another indecision candlestick right here, and then what went down, went up, gave us an indecision candlestick right here, which signifies whether buyers are about to what lose momentum. Like I said, something market doesn't just give you indecision candlestick, simply means they're going to be what a reversal. If you can see right here, after this indecision candlesticks were being printed out right here, we're expecting a reversal. And then what happened? Market just sold for a while, and then what gave us what another indecision candlestick right here, and then what went up, came back down, gave us indecision candlestick right here, and then what went back up, came back down, gave us indecision candlestick right here, and then what went up. If you guys can see how this actually works, once you're seeing indecision candlestick, this another indecision candlestick right here, printing now, and then what happened? Market what went, and then gave us indecision candlestick, and then what happened? Market went up. Most people actually use this to like this actually was one of their strategy. They just come into the market, they wait for what where indecision candlestick are being printed, and then they will trade against the direction of the market. Like I said, for example, now we have the market being uh bearish here, which means selling, and then we see an indecision candlestick were printed out here. They would have looked for what we have to take what buy from here. They can actually buy this market, and they would have bought this market right from here all the way to this one, to this high. They would have made their profit, and then they saw what another indecision candlestick right here. Now they might not like, wow, okay, doji candlesticks are being printed out. What should I be looking out for? Let me now take my sales right from here, and then boom. If you guys feel, you guys can actually do your back testing, open whatsoever pair you want to look out for. Look at how market always reacts when it brings out what indecision candlestick. Look at how the market what reacts after being indecision candlestick have been what printed. And like I said, an indecision candlestick simply means what there is a possible what reversal in the market. There is a possible what reversal in the market. If you are seeing candlestick printed out like this, a small body and a long wick, simply means what reversal candlestick. If you're seeing a candlestick with a tinier body, a long wick, or a long shadow, simply what reversal in the candlestick. Most cases you might see it looking just like this. If you're seeing all this kind of candlestick being printed out, simply means what there is a reversal in the market. There is a reversal about to what reversal is about to what happen. me guys, reversal is about what to happen. Like I said, we have other candlesticks that are gonna be what printed out, and those are what gonna be taught on my private classes. Those are gonna be taught on my what private class. And I said at the beginning of this class of this training, I said I'm not gonna be teaching us everything. I'm not gonna be teaching us what everything. And then if you still want to what get my books, I have a book that actually teaches us what candlestick. If you want that particular book, I sell them. So just send me a DM and then I can actually what give them out for you if you want to purchase one. Now, that's all being said. Like I said, most of like I said, we have so many candlesticks, but the major ones are the ones I just explained, which is what the doji candlestick, and then the what bullish engulfing candlestick, which is what I correctly spoke about spoke on right here. And I believe with this we can actually now understand how the market actually works, opens, and then how it was closes. Because like I said, every candlestick on each time frame you are, each candlestick was indicates that time. Like I said, let's assume this is a daily candlestick. This is a daily candlestick. Market is actually what opened right here and then closing right here. This is a daily candlestick. If now this daily right here, if you go down to a 1 hour time frame where it is opening and when it is closing, you will have seen what different candlestick what printed out on the lower time. Let's say on the 30 minutes time frame, on the 1 hour time frame, different candlestick would have been printed out all the way to this upside. And then if you come here on the daily time frame as well, if you go down to the 1 hour time frame, you will see different candlesticks that have been opening, going downwards all the way to where it closes. And the market closes right here. Now the next day it's gonna open again, maybe from the night. If it's going bearish, it's gonna open right here, and then maybe continue downwards, which is what we're having right here. Let me now take us to the chart. I'm still gonna show you same thing. Look at what we have. This is on the daily time frame. You see, candlestick opened right here. Let me take all this off. If you can see what we're having right here, currently running in profit here. You can see right here, markets opened. Let me make this bold. This is the daily time frame. Each candlestick here represents days. We have how many days? 1, 2, 3, 4, 5. 5 days. All these movements are all happened 5 days. And like I said, this was the last candlestick. You can see right here. Market opened right here, and then it hasn't closed because this day hasn't ended. The market candlestick hasn't closed because this day hasn't ended. Look at the previous candlestick that happened yesterday. This previous candlestick. This is actually a green candlestick. And now what did I say a green candlestick simplifies? Simplifies what? A bullish movement, which was an up movement. And now on an up movement, where did the candlestick open? The candlestick opened right here and then closed above. And now the market still opened at that same market closes above yesterday, closes up, closes bullish yesterday, and then today it opened right here, and now it hasn't closed yet until we wait for it until this particular candlestick closes at the end of today. It closes at the end of today, then we now know where it's going to close. I don't understand, but yes, this candlestick closes above, and then today is opening that same place, and then you can see it's beginning to sell. Are you me, guys? So I feel with this few explanation, we were able to understand how the market actually opens and then how it closes. Like I said, every big candlestick signifies a trend in the market. A big red candlestick signifies a sell. A big green candlestick signifies a buy in the market. And then if you are seeing market being choppy like this, signifies an indecision in the market, which means we don't know if buyers are about to get into the market or sellers are about to get into the market. And now that's going to be the end of this particular topic. On our next class, we're going to be diving into the chart itself. We're going to be talking about bullish trend, how to identify trend. We have different kind of trend. We have the bullish trend, the bearish trend, and then the consolidating trend. That's going to be our next topic. So see you guys on the next class.